There's a number that just quietly flipped for the first time since 1996. Central banks around the world now hold more of their reserves in gold than in U.S. Treasuries. Not oil, not stocks. Gold. The one asset nobody can print, freeze, or sanction. And they've been buying it at a pace we haven't seen in decades. For most of the last 30 years, central banks were boring, predictable buyers of gold, averaging around 500 tons a year, roughly the weight most reserve managers considered enough. Then, in 2022, something changed. And it wasn't a gold rush. It was a wake-up call. That year, the U.S. and its allies froze roughly $300 billion Russia's foreign currency reserves in response to the Ukraine invasion. Overnight, every central bank on Earth learned the same lesson at the same time. Dollar reserves aren't just an asset. They're an asset someone else controls the keys to. And if you're on the wrong side of a political decision, they can be switched off. Gold can't be frozen. It can't be sanctioned. Nobody else's government can flip a switch and make it worthless. And starting that year, central bank gold buying didn't just increase. It roughly doubled. 2023, over 1,000 tons. 2024, over 1,000 tons again. 2025, more than 1,100 tons, the third straight year above the 1,000-ton mark, a level central banks essentially never touched in the previous 2 decades. And it's not just one or two anxious countries. According to the World Gold Council's 2026 survey, the largest turnout in the survey's history, 43% of central banks now plan to increase their gold reserves this year. 2 years ago, that number was 29%. Poland has been the most aggressive buyer in 2026, working toward a 700-ton target, citing security concerns on NATO's eastern border. China has added to its reserves for 18 straight months. China and Russia now each hold more than 2,300 tons. BRICS nations collectively now hold 17.4% of all global gold reserves, up from just over 11% in 2019. Here's the part that should really catch your attention. This isn't just central banks quietly hedging in the background anymore. Morgan Stanley research confirms that gold now makes up a larger share of global central bank reserves than U.S. Treasuries, the first time that's happened since 1996. For 30 years, the Treasury bond was the undisputed safest asset on the planet. That title just quietly changed hands. So what does this actually mean for the dollar? It doesn't mean collapse. The dollar is still the world's dominant reserve currency, and that's not changing overnight. But it does mean something is shifting underneath the surface. A slow, structural move away from total dependence on any single government's currency, driven by countries that don't trust being that exposed anymore. And if you've been watching this channel, this should sound familiar. It's the exact same instinct we saw in family offices moving assets to Switzerland and Singapore. The exact same instinct that pushed private credit to a 30 trillion addressable market. Smart money, whether it's a billionaire or an entire government, doesn't wait for a crisis to hedge. It hedges quietly, years before the headlines catch up. The people managing trillions of dollars in national reserves just told us, in record numbers, what they think the future holds. The question isn't whether you should panic. It's whether you're paying attention to what they're actually doing with their money, instead of what they're saying on the news. Subscribe if you want to keep seeing where the world's smartest money is moving before everyone else notices.